Good day. This is the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, September the 28th at about 3:30 p.m. Pacific Daylight Time. And first, a little bit sorry that I am a little bit behind in getting the updates up and published today. A lot of other things going on, but nonetheless, I am going to start here with the SPX cash market. And I'm on the weekly chart because I just want to review very quickly where we are within this picture. And as we can see, that actually was the all-time high. It's a little bit scrunched, and I understand that. And so I might just do this and then just pull it open a little bit this way and this way to kind of give me that height. Yeah, that's kind of more what I want to do. So anyway, that was the high from January of 2022. So that's basically, we're dealing with the market since that point. And what we're still remain within, so that all the decline all the way down to October of 2022 was an ABC, but it also just formed the primary degree fourth wave. So our largest wave that we're counting here is a primary fifth wave from that October low. It's not done yet, not even halfway. More maybe just reaching a halfway point. And that would be that we're still within the intermediate degree third wave. And so what we have is, after reaching that high, we have an intermediate degree fourth wave and then an intermediate degree fifth wave to finish primary five. So there's still, actually, as I go down in time, there's still the either or possibility that we top out a little bit earlier or lower, come back down to this area, go back up, finish that third wave I'm now talking about, come back down again and go back up one more time to finish then primary wave five, and then a much larger cycle degree third wave. So we're sitting around at the top. We're not done yet. There's still additional upside to come, and I mean substantial from where we are when you're considering that we're trading at 57.38 and we're looking at 63.50 or above before all is said and done. Now, that does not suggest that we're going to do that by the end of this year. We are not even going to be close. I think by the end of this year, we may finish up here, but let's just go through the sequence. So the sequence is that a primary fifth wave, an intermediate third wave is what we're working to complete. What's going to be inside there are five waves of minor degree, and there's 1 and 2, 3. Not sure if 4 is over. That's the other suggestion I was making, that if we're still in minor wave 4, then we still have a C wave down and then that last leg up. The other side of that coin, and we'll talk about that as well, is that minor 3 is complete and minor 4 may be complete, and we're in a 1, 2, 3 going up, and then we're in that minor wave 5, and then of course we'd be looking for higher than where we've been. And then to complete that minor fifth wave and then that intermediate third. All right, so let's start breaking it down from there. And we'll go from the weekly, and I'm going to go down to the daily. And now we're inside. Now we can see there's the minor third. We're here to determine. So basically, we're looking at what's really going to be our moves, or what's going to happen between now and the end of the year, basically. Because come after Monday, we are then officially in the fourth quarter. Third quarter ends on Monday. The fourth quarter begins on Tuesday. And then we're pushing to year end. And so, again, a lot of things seasonally start to kick in. And I'm going to take a quick look at that as well. So seasonally we have different sectors within the S&P, within the NASDAQ, particularly that we have healthcare. And then we also have biopharm and biotech ETFs that have seasonality to them, and that will, and in turn, affect the S&P 500 and then also the NASDAQ 100. So we have a balance going on. And so that's going to be inactive going into the end of the year, along with, do we get another rate cut before the end of the year? So there'll be all of these internal things. And at the same time, we do have geopolitical things. And for the United States, the most important thing happening right now, of course, is the election. And the election here in the United States is on November the 5th. And so undoubtedly, it is going to be major in terms of direction, in terms of just, where's the United States heading? So a lot's going to be said, but in the meantime, we may have a build up to that point, and then we may have a reaction after, as then everything starts to make adjustments accordingly. Now, seasonality again comes into play. So right now, I'm going to come down here to the daily chart in the SPX. So we're really looking to try to determine, did wave 4 end and we're actually in that minor fifth wave up? And in which case, that I'll go over that in just a moment. So within the other framework, that we're basically up here towards irregular B. So in other words, we're still in minor 4, and there is the A wave, the minute A wave, and we're getting ready to finish up, if possibly we did finish up the minute B wave, in which case then what does that suggest for us coming down in that C wave? So within the context of that, that's why I've left this here, because this, of course, is the support for the minor fourth wave, which this would all be a part of. Now, a couple of things that it comes down and we finish it up in October, maybe even November, then the market has fulfilled another time factor, and that is the Fibonacci time fractals, or the time sequences that can be put into place that kept or continues to keep this potential alive. Now, one other number that I want to add, because if it isn't irregular, and by that I mean that the B wave exceeded the top of the A wave, the start of the A wave. So that in and of itself begins to tell us, like, so we're going to be adding just the irregular section of it. And I got to put up first this one, go in and start taking all of this out and put this in and color code it to the correct level, which is the minor. So here we are in the minor degree. So 57.99 is 1.236. And we'll take this down. So I'll leave these up. And 1.382 is 58.79. So we still have potential that our fifth wave is still fifth wave within the minuet wave C, within the minute wave B. So now I'm going to start dropping this down. So now we're looking at what the possibilities. If we get a C wave, you can see it'll be sharp, it'll be steep, it'll be a very quick drop, because these are the areas that we need to get back to. Now, even if we're just going no further, let me take this down, put it on the 4-hour chart, because there's one more add that I want to do to show that here we are, the A wave, the B, then the A, the minute wave A, minuet A, minuet B, and now minuet C possibly complete. What it'll leave open is the potential that this is actually 3, and this is going to be the 4. Gives a little bit more room, but this is actually giving me a better clue that there's a strong possibility that it's over, and this ended in a diagonal, even with that surge up, finish, and down. It does fit, but I'd leave open the potential that the market has one more little push to go, so that it's like ending up being a 1-2, or this is 1-2, and then we're going to really go, in which case we're looking up much higher. We go above 5,800 before we're finished with anything. And then we have the first one at 57.99. That, I would almost think, if we have one last 5 to go, that's very strong. And a break above 58, you have to consider what could do it, and it would have to happen on Monday, because don't forget, Monday is the end of the quarter, and it's also the JPMorgan collar finally gets placed. And really what's being also, so we're expecting greater volatility on Monday, just as positions are switched, are adjusted, are made ready for the fourth quarter. So a lot of that's going to be going on, and will affect volatility, will affect how fast or how quick and how severe we can move around. And so the action itself could be very choppy, but it could be productive in terms of, do we go up and finish and then drop as a result of, or do we go down and finish what could be a smaller correction, or really show significance to the fact that we might have finished this minute B wave and we start to drop down in a C wave. So that's all left in the lurch right now. And because we have to leave both ways open because of the intensity of what's going to be taking place on Monday. Now, one of the things, it's like, along with the JPMorgan doing their collar, it essentially, what it's doing, it is laying the ceiling and the floor. So JPMorgan is reestablishing the ceiling and the floor according to their hedge fund. Now, they're pretty big, and so we respect, as market players, we respect those levels. Now, there might be others that are going to go challenge those levels, but I think that there has to be good reason. And undoubtedly, if the reason's solid enough and has enough effect on JPMorgan's positions, they will make adjustments. So, but again, more important for me right now, since I'm a little guy, and most of, even up to the big banks, can be little guys against the big bank. So we're reestablishing the ceiling and the floor. And that'll be the put wall and the call wall. So with that in mind, that'll also be taking place on Monday. And then adjustments will be made, I think, to direction and volatility. Once those things are in place, traders and algos are going to realize what can be done and what to do and what direction they will take. So that's all yet to be determined, and we're leaving both sides totally open. Right now, we have the ability where we could go up. We could even get up closer to 59, finish what still would be a C wave, or if I'm going to be done with this and I'm going to step over to the other view, that view would suggest that this -4 is done here. And this is wave 1 and this is wave 2, and we're doing 1, 2, 3, 4, 5. Maybe is it 1 of 3? Or is it all of 3? Right? 1, 2, 3. Now, if we're looking at it that way, then we're really looking towards these levels, because this, if we're going from here, right, that's the high for this sequence, and that's the low for that sequence. So this run would be equal to this run at 59.34. Well, if it's third wave, you're looking for higher. So that's going to be something else that we will realize. Granted, it's a long way in between, but I think we'll have other clues. But if we're dealing on this level, now you're going to see why I say, is it all of 3 or just 1 of 3? It's going to be depending on, if it is that third wave, where we end up. And that's where the indications are telling you that we kind of go through these. It makes itself known. This would be the irregular. They get tossed. This gets relabeled. 4, 1, 2, 3. So that's what we're going to be looking at. Now, seasonality. Seasonality is it's not weak, but it's not super strong. And I would not be anticipating stronger rallies until November. I think November is when year end starts to kick in, and I guess other seasonal factors, but we should be strong with a small pullback at the beginning of December, and then into year end, another rally. So we're going to end, I believe, up at the highs. And accordingly, I would then say that very realistically, that we either will be completing the minor fifth wave towards year end, no matter which way we go in between. So we could get a very strong November, even after coming in and doing if this is going to be a C wave and we get that C wave down. And then because the next wave, that minor fifth, it'll be the biggest mad dash. And it'll just go. And because it has to reach its pinnacle. And we're going into year end. And algorithms will just trigger each other. The intensity of the momentum will just trigger each other until everybody's running out and everybody's fine looking who's left to buy. And if there's nobody left to buy, then we get them turn and fall under our own weight. But my point being that we still can go down back into these levels, have a nice little sell-off, and for whatever the reason might be, and then flip, turn, and go up. Seasonally, October is kind of mixed. We have a rally, then we come back and we have another rally, and then we come back a little bit, and then we move into the intensity to the upside. So we rally, that's what we've done. We come down a little bit. Just because the seasonality chart is kind of showing a seasonal low, a short-term low, and then before a rally picks up again. The month of September was weakness, and so we kind of didn't. So is that part of the seasonality cycle coming in, since we were looking for it to kind of come down and reach a low? And in some areas, maybe it did, but overall, we're looking at like the S&P, and it's like it's not really showing up. So is that cycle late, which in terms then puts everything out? So the month of October will be more weaker, and then picking up in that November for year end. So yet to be determined, but these are influences on our market. Also, that I think it's important to bear in mind everything that's going to be coming out once we go and get through the Monday's expiration. How much gamma that releases, what really starts to kind of come in and produce this stuff for us. It's like give us the information, the numbers, the levels, and they can get plugged in and see what the models are saying and what they're going to actually do, because that actually is what I'm now pulling up. So forgive me for putting in words while I pull this window open, because I thought it was already open. And that is where the flows are, where the options flows are. The capital is flowing back and forth from one ETF to another ETF, sector to sector. And on that matter, I think that there's a couple. I think that the IBB, which is the associated with the Nasdaq and its biotech, may see some weakness, seasonal weakness. And I'll get to that again because that's over in the Nasdaq, and that's when I'll pick it up. But right now, I want to take a look at what our levels are coming out of Friday's expiration. And so I'm going to be looking at first the ES and the SPX. And the SPX finished the day at 57. Yep, I got to pull that open just a little bit so I can see it. There we are, 57.38. And so on our scale, we are still below that call wall, which stays in place because it doesn't roll until Monday. So 57.50 is still the call wall, and 57.50 is still where all that large gamma is, because JPMorgan hasn't done their roll yet, and whoever else is still sitting there waiting. So if that gets broken, it may or it may not really push this large collective cover because of what it is, and because the market does know that it will be rolled. So again, the veracity of breaking it, I think that we might see JPMorgan will just jump over to the 0 DTE options, which are going to be the same ones they're going to be trading, and start doing those against that position. and then eventually just rolling it. Now, to the upside, we have 57.50, 57.51 small, a large combo, but it's really between the ES and the NDX, because right there is also 58.07, which in the ES is above that call wall, because the call wall said 58.06. So there's still something sitting there from when it was at 58.07. It's actually dropped down a point as far as the call wall is concerned, and in the ES. So, and then above that we have 58.30 and 58.56. These are levels where there should be gamma collected. But in terms of anything larger, that's where we're waiting for. Because right now, the largest one then we're all looking at and sitting with is 57.50 in the SPX, 58.06.07 in the ES. That's the call wall, and that's going to get moved. To the downside, the volatility trigger is actually at 56.85 in the SPX, 57.41 in the ES. So again, 56.85. So it has to come down and break that 4, which would be a good sign. If they came down, it would tell us, I'm going to bring this out of the sunshine here and bring it down to the hourly. So what if this is all done and this is 1, 2, 3, 1, 2, we're starting in the 3, a 1, 2, and then a 1, 2, something look like that, very possible. But we're going to start to come down and start breaking. If this is done and we're starting that C wave, the minute C wave of minor wave 4, it should come with a big kick in the poo, a big kick in the face. I'm sorry. Because I wanted to say something else, but I didn't. In any case, it's going to come with some strength and it's going to break down. And that's going to be a clue there. Otherwise, if all this holds and we turn, something comes out positive, those are our levels coming up to the upside. So we're leaving both open. A little bit longer term, actually, both are still in play. The end story to all of that, to the little bit longer term picture, if we're going in in terms of we're finishing up wave 1 of 3, or if we got high enough, wave 3, the minuet wave 3 of minuet wave, minuet wave, yes, 3, minute wave 3, minuet wave 3 of, wow, I'm just losing my levels there because I'm looking at the wrong things. Anyway, whether it's going to be wave 3 of minor 5, so it's minute wave 3 of minor 5, that's the thing. Sorry, please excuse me for that. Brain fart, as we call it, right? All right, let me go over to the ES here, and the moving averages, they really are doing fine, except we have the hourly 20 now playing right on top of all of this, and got ridden for it all the way Friday, set right there. And the other two are kind of going flat right now in the SPX on the hourly. Over in the ES, excuse me, kind of, of course, the same picture, but I'm showing the other side as if we still have one more little rise. So again, I can count as complete. I can put a 5 right there, and that, see, got it right there. And that would suggest that we start to go down, and this is 1, 2, and we are starting down. That's how we got left. Let's say, okay, 1, 2, and we are going to head down. If we start to open tomorrow and we break the hourly 200, well, we should get some decent follow through, and then it could be 1, 2, and a third to put in that first wave of C. Right? So we come down in 5 for the first wave of the minuet. So again, this is going to be above all that. Oh, dang it. Above all that will be the minute wave B. And we'd be in a minute C wave of minor wave 4. So this would be minuet wave 1, 2, 3, 4, 5. Because again, remember here, just to kind of equate it, there's the targets. 53, 50, 37 down to 4808. That's in the S&P. That's in the futures market. Now, from here, we just need to get below or to 50.85. That's that low of minute. And so that works. And then we could finish that coming down in 5. So you could see the first one's going to be just the minuet wave 1, 2, 3, 4, 5. And then we'll be all done with that. The other side of that coin, again, coming back down to the hourly chart, is, okay, if we have that fifth, and what this fourth wave, really, see, it's already breaking everything, which makes it much easier just to kind of put it all together that this is the 5. Then this has more room to drop no matter what. Because either it's going to be, now on the other side of this coin, right? If this is 1, 2, 3, 4, 5, and we're not finishing that minute B, or then it could be, it's going to be minute wave 1 of minor wave 5. And that would be a whole lot more. Or even if we're coming in, yeah, I would have trouble. I've been saying minute 1, minute 2, minute 3, minute 4, and then we're in the minute wave 5, and then we don't get up to there, because I think it'd be a lot bigger. If we're still in a minute B wave, I don't think we can get much further. If we had the 3 and the 4, and we're going to come up, we have to stop here. We got to turn and go. If we start to drop, then I'm more in tune with this, putting this actually over here, and that we start to drop down and we start breaking these levels. And if that's the case, then again, going back out to the 4-hour chart, ultimately we're going to drop down to here, but we would go back down to the hourly chart so we can see it. Oh, I can't, because I got to get down to here. That we want to be able to include, I got to go out here. We go from there. Oops, and we're going to put well, I'm not sure. It's from here. A little bit, well, drawing down to here, up to, let's just say it comes in there. So 1.618, 48.62. Remember, it is an irregular, even though we're not getting up to here. It's still, we're close. It still would be considered irregular because we went above there. And so we look for 1.618 coming back down, and it's as low. It could go, yeah, that would be 100%, but we know we need to break that. Go below that for that C wave. So we're looking at this, which is 38% at 5,037, which keeps 5,000, which I know is still in play, by the way, as a long-term support, long-term, 5,000 still. And in here, you got to add you have to add the premium in the current contract. So I don't know that right off the bat. But I would say 50.37 probably fits pretty well. But in any case, that would be the downside. Upside, we just talked about it. If we're coming in this way, let me go back down to the hourly chart. If we still have to go up, we can't really come down. We can come down and equal that. So we got what, 57.78. Don't want to come too far down because we're smashing all of this. You know, so that it does become very difficult to lean towards that this is going to be, if I had to, again, I could put a 5 there, but it's going to be wave 1. Minuet wave 1 of the third wave. So it changes. This, of course, would change. Because again, if we're in that minor 5, if we're in the minor 5, this is 1, 2. This is going to be minor 4. This is going to be minute 1, minute 2 of minor 5. We are finishing minute. We're not finishing the whole 3. In my opinion, we then would just be in the minuet wave 1 of minute wave 3. Are we going to finish minuet wave 1, come in? This is where just the difference between minuet, but you can see that we would not be done with the entire wave up at that level. We definitely would not be done. We would have a whole lot more to go. But because what we've been finishing is 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, then another wave 4, and then a 5. So it does appear to be pretty much in line till we go up to where we can finish in immediate. So minor wave 5. It's going to consist of 5 waves of minute degree. I could go minute 1, minute 2. I could even do minute 3, minute 4, and then we're just coming into minuet wave 1 of minute wave 5, of minor wave 5. That could work, and it's just a more powerful 5th wave, which could get us all the way up to here. And then I would have more ground to stand on to start putting in additional layers. Like right now, these layers are for this, for the 5th wave, the sub minuet 5th wave, to finish the minuet 5th wave, to finish the minor 5th wave. So 1, 2. So actually the 3rd, and then we get a 4 and a 5. So I still think we can get up there. That's on the other. That's the more bullish of the whole thing. Now, moving averages here, 4 hour, they're actually sitting pretty good. So we just one up to the daily and take a peek. Very nice. They're still all pretty good. A little bit going flat while we wait, see what direction we want to go in. The other thing to kind of bear in mind is that, again, Monday, big day, end of the quarter, going into the 4th quarter. Still, inch by inch, day by day. By the end of the week, we will be a month away from the election. And so it's going to creep up, and it's going to go pretty fast. We've got all that going on, seasonal factors, et cetera, plus levels. And I gave them in the SPX, and I gave them in the ES, over in the spiders. Sorry for the disjointed there as well. That the spiders finished the week at 571. Pretty large gamma, giving it some support right there. And then at 570, that is also. And the volatility trigger dropped just 1 point to 569. So it's 570, 569 is volatility trigger, and we're close. Now that getting triggered and turning the atmosphere from positive to negative in terms of gamma, well, then it's going to be interesting, because again, I think it could be triggered, and we could see again the reaction being to the downside, that they'll push it, but until they actually can resettle the floor and the ceiling, I think that could be reestablished, and the volatility trigger would be redrawn. Okay, I am going to end it there. And the next daily update will come on Monday, September 30th. We'll begin to update it as it finishes up. Enjoy the balance of the weekend.